Hi traders, Matt here from City Index. So today we'll be taking a look through my picks for the week. But first we'll do a very quick recap of last week's events and what to look at on the calendar. So let's get straight into it. So last week the ECB delivered a 25 basis point dovish cut, which means it left the door open to further cuts. So we don't know the timing just yet, but there are, as you can see, ECB members speaking this week. So hopefully we'll get a little bit more clues, but knowing the ECB, we probably won't. RBNZ as well, they delivered a 50 basis point dovish cut, so they came out swinging and that prevented a short covering rally on Kiwi crosses. US data is generally outperforming at the moment, but on Friday we did finally see what's called a down day. Feels like it's been about 3 weeks since we've seen one on the dollar, but we'll take a closer look at that shortly. Now, the Australian jobs report was very, very strong, and that's pretty much killed any hopes of an RBA cut anytime soon, possibly even next year. And we've got a bit of mixture coming out of the UK. So we had really weak CPI data coming out, which bolstered bits on a Bank of England cut. But then strong retail sales muddies the water. That came out on Friday. So I think out of all the central bank speakers this week, Bailey's probably the more interesting one because I think he's pretty good at trying to direct the market. So we could get some directional moves for the pound crosses on what he does or doesn't say, or pound pairs. As for Fed members, we've got quite a few of them speaking at the start of the week. And to be honest, I'm not expecting any fireworks. They're more than likely to be sticking to scripts, pushing back on oversized cuts. And it's really down to data. Beyond that, you've got the Bank of Canada cash rate is possibly being cut by 50 basis points. So the question there is, will they deliver a dovish 50 basis point cut, or will they keep it cards close to their chest, point at data independence or dependence, sorry, and will that end up prompting a Canadian dollar rally? Because keeping in mind that Canadian dollar has been facing a lot of selling pressure based on expectations of a 50 basis point cut. And beyond that, flash PMIs are probably the bigger ones. So I think we could be off to a slowish start to the week. That means probably don't be taking oversized bets on anything right now. But when we get the flash PMI data, ideally what we want to be seeing is divergence between these reports to get some movements on the currency pairs. So without further ado, let's get on to the US dollar index. Okay, so this is the futures chart for the dollar index. Again, that's a pretty epic rally there that you've seen. And what I really like about it from a mean reversion point of view is that this high on Thursday almost perfectly respected this high volume node. So during this entire decline, the most traded price by volume was around 103.71. And you can see the market just stopped just shy of that. And then on Friday, we had this kind of a 2-bar reversal pattern. Now, in isolation, does that mean we're going to get an epic reversal lower? Probably not, because data is generally outperforming for the US at the moment. But purely on a technical perspective, it wouldn't be impossible to maybe suspect a bit of a pullback to maybe the 103 area. Of course, though, that doesn't mean we're going to go straight there. We've got a quiet start to the week, so if Fed members do push back on rate cuts, then we could find that a market ends up being supported. But maybe on lower time frames, we could zoom in and look at some traders might look to fade into highs to try and capture a tiny small pullback to 103 area, keeping note that we've also got this bearish divergence on that daily RSI too. Now, in terms of setups, Aussie yen has caught my eye again, and just to show you how quickly things can change, last week we were discussing this potential short based on this lower high and the potential for yen pairs to attract safe havens heading into the US election. However, you can't really deny the fact that the 200-day exponential moving average, the 100-day, has provided support. You've got this really good buyer's bar on Thursday and this little bearish bar and a bit of a pullback. So this could potentially be some form of a bullish triangle, bullish flag. If we were to predict this mast here, that lands at around 103. And the question there is, how do you get into there? So assuming that we're waiting for a breakout from this consolidation and looking at momentum from these two moves, personally, I would be looking for retracements back within the range or maybe towards the 100 handle. And if you're looking at the daily time frame, really what you want to be ideally seeing is low volatility pullbacks within the lower bounds of this range whilst holding above last week's low, and that could potentially increase the vol-to ratio for a cheeky move higher. We may not get anywhere near 103 or even 102. just keep in mind this has been a bit of a choppy market at the moment. So unless we get a real risk on catalyst, it could continue to be choppy. That's always the risk in trying to preempt breakouts. But what you could also do is maybe look at the 4-hour chart, and the levels are a little bit more clearer there. And to me, we still don't know for a fact if we're seeing a topping pattern or some sort of continuation pattern. But because of the trend structure on the daily chart, my bias is for an eventual move higher. So basically looking at dips in the lower bounds towards the 100 area for each cheeky swing long. Also note on the 4-hour chart, you've got RSI 2 is oversold. This one popped out at me a little while ago. You've got the Euro Aussie dollar. And again, it's probably one for a swing trader, but you've got this, a decent rally there, a bit of chop. From this information alone, we can't really tell whether we're going to extend this trend lower or whether we're trying to buck that trend. So again, this is not really one to be looking at for a multiple week hold or anything like that. We had a small buyer bar on Friday, but it did stay in the lower half of Thursday's candle. Now, what I like about the 4-hour chart is that we've had RSI 2 reached overbought, and we've got this 3-bar reversal called an evening star. So for me, as long as prices remain beneath that high, is there anything else there? You've also got the weekly pivot point just above. Now, I'm always trying to find value and increase the reward to risk to my favor. So for me, I think any moves towards this sort of range that might excite some bears for cheeky swing trade shorts. And you'd be looking at maybe down at the cycle lows or in that little cluster, you can see around the 160, 160 area. For whatever reason, there's a lot of open close prices in that area and false wicks. So that's why I'd sooner see prices come up before seeking that short opportunity. Euro dollar. Now that is an interesting one. It's one of these pairs which has me umming and ahhing a bit, because you can kind of torture it and see what you want. And that's a bit of an alarm bell for me, because on one hand, we've got this very, very strong down move. I think it was something like 13 out of 14 candles were down days, something ridiculous like that. Of course, we've got this bullish outside day, possibly an engulfing, whichever. Does one candle spoil a trend? No. So I think you need to be really careful here on what your time horizon is and what you're trying to achieve, because for you to get a decent long setup on the daily chart now, ahead of an ECB meeting and a lot of Fed members speaking, it's a bit of a risk. So as always, my personal approach is to try and squeeze as much reward out of the potential risk as possible. So if I was looking at longs on the daily time frame, I'd want to be seeing prices come back lower, maybe closer towards the lows, or at least the bottom half of Friday's range, to better position yourself for a cheeky move to 109. Keep in mind you've got the 200-day exponential moving average there as well. And that takes me to my second point. In actual fact, when you look at the 4-hour chart, it's a very nice bearish trend. If we've got resistance bound 109, and the market might try and reach for it, but at the same time, I would suspect that bears are probably looking to re-enter as well. Now, are we going to get a compelling candle either way? I don't know. But I would say that for me, the way that I look at this, the daily, I want a lower price. For the 4-hour, I don't think we're quite there yet. Look for a compelling reversal signal, maybe around 109, near that 200-day exponential moving average. Then we can reconsider the potential for a cheeky short. Also note, again, RSI 2 is overbought. Now, the SP 500, this is the futures contract. It is clearly in an uptrend. You can't really deny that. However, market is struggling around these highs every time. So we do have more earnings out this week. So keep in mind that tech stocks are reporting quite a lot this week. And that could move the market quite some way, especially the NASDAQ. But keeping in mind that I'm not expecting a lot of movement at the start of the week. And each time we've come up, it's making more effort to get there. So for me, I think we're looking for false breaks and cheeky shorts back to maybe towards 5,900, maybe even the weekly pivot points. But again, you need to keep context of the size of this trend. On Wednesday, you've got this bearish pin bar as well, this relatively calm, bullish inside day. So for whatever reason, the market's not in a hurry to get to 6,000. I think it will probably get there at some point in the future. I don't know if this is the time. So I think given you've got this very strong trend, we're not looking for massive counter trend moves here. It's not the end of the world. But I think we could maybe get a cheeky short looking for false breaks. And by that, I mean, you wake up and you see you've got this higher wick with a close beneath the key level, such as that. Then you could look for getting, hopefully positioning yourself for that bit of a pullback. But again, just to be a bit realistic, you're fighting the trend here. And it's a bit of a similar setup on, that is not the ASX 200 futures market. That's fresh apples, which I've never traded. So here, again, it's pretty much tracking Wall Street to a degree. I like this change in character here. Now, I was arguing last week that I think look for false breaks. And we did kind of get one, but then we had an absolute stonker of a buyer's candle. Couldn't quite close above 8,400. We then got a bearish engulfing candle, then a bullish inside day. So there's a lot of chop here. So this isn't a market that looks ready to simply aim for 9,000, for example, to me at least. So I think, again, like the SP 500, that we're really looking for areas to fade into. And one obvious one is 8,400. You've got the weekly R1 there around that record high. So again, patience is a virtue on this thing. There's this really great saying, and this really applies to stock markets. Bottoms on event, tops are a process. And what that means is that it can take quite a while for a market to top out, even if it does. Whereas you tend to find the V bottoms tend to perform quite well on indices. So we're not looking for something to tap 400 and go down to 6,000. That's just not realistic. But again, I just like the fact that we've maybe even got some distorted head and shoulders pattern forming. It's not a textbook example by any means, but hopefully if we got a lower high, again, some bearish candles and maybe 8,400, move back down to the September high. I think that's realistic. Okay, this is the futures market of the China A50. And find my correct indicator, pivot points, that's right. So a bit of context here. You've had this phenomenal rally. I think it was up like 40% in 9 days or something like that. And then we had this bit of a pullback, quite an aggressive pullback to underscore, and it probably gave back half of those gains. We've now got this inevitable choppy range where it's the aftermath of an emotional party. That's what it looks like. So you've had this FOMO, people jumping in, people getting their fingers burnt, people wanting to go higher, and now people are kind of that hangover phase where thinking, well, what happened there? What was that all about? Where do we go now? And what you tend to find after these moves are that you don't really get a compelling move like that in either direction. However, what's changed is if we look at the daily chart, you've got this really nice bullish engulfing or bullish outside day that formed on Friday. It's around 13,000, which is obviously a bit of a round number. And if you look at this, it's also formed around the monthly pivot points as well. So for me, given that we've got changing character, lots of bearish momentum, bullish engulfing candle around a cluster of support levels, it's one of those markets looking for dips within this 2 candle range. Maybe we can get up to the 2023 high around 14,220. How far it goes is really down to sentiment, possibly globally, what's going on in China. But I think that's a realistic move. Maybe if we get another catalyst, perhaps to go for 1,500. But obviously, the further away you go, the longer you need to hold that position for, and the less the chance it is of it occurring. So it's really down to your risk profile and how comfortable you are holding the positions. Now, they're the main ones for the week. 3 I'll quickly touch on before I wrap up, because they kind of need to be discussed, but that doesn't necessarily mean they're trade ideas. Is dollar yen. That we did finally see a bullish close of over 150. You kind of had to, really. It'd be rude not to when you've made all that effort. But next day, on Friday, dollar was lower, and you've got this 2-bar reversal. Now, again, that doesn't necessarily mean we're going to get an epic reversal on the US dollar. We need to see how it plays out. But really, this is for me, like I believe I said last week, it's one to be looking at fading into the highs. It's already had an extended move. For us to now look at by the dip mentality, I think we're going to be wanting to see US data coming in stronger. So again, you need to wait for the pullback to either look at seeking the dip or wait for the rally, wait for a lower high, then to fade into it. And again, I'm not looking for oversized moves here. Looking at the calendar, I don't think we're in for a particularly volatile week. So just understanding that can help you adjust your expectations for what's possible. So this is really a bit of a scrappy trading week potentially, but that doesn't mean there's not opportunities out there, but it probably means you need a little bit more patience, drop to lower time frames or step aside. Taking a quick look at the Aussie, again, I feel we should look at it, but I'm not getting compelling, overwhelming feeling to get involved at the moment. You've got, I think we discussed it last week, where you got this strong support area around the 200 average. We're now trying to trade higher for a third day. There's not really a lot of stuff coming out from Australia this week. Purely on a technical basis, it looks like it wants to tap that 6,730 area. Then what? I'm not entirely sure, to be honest. So I think we're looking for a less volatile week. If you look at the weekly charts, we've already fallen for 3 weeks. The last 2 weeks, 50% of the range was the lower wick. So yes, it is moving lower, but there's a bit of a fight at these lows. And perhaps coincidentally, possibly not, it's closed on the low of the prior week. And that's trying to hold above the 100. So upside potential, I think if you're going to get involved in this one, you're looking at intraday really, but I'm not really getting a massive over compelling feeling on the daily. And then similar to dollar yen is dollar Swiss. And actually what I should touch on before I go is positioning of this. So check out the link in the chat. You should have that for this full article on the COT positioning. It's basically how future traders are positioned. Now, Swiss National Bank, they want a weaker currency. They've been touting for it. They've made themselves very clear. There's many speculating that they've already been active in the currency markets to prevent it from getting too strong. So it's interesting to see that large speculators and asset managers are piling into shorts. Short, there's a little bit of pickup in longs, but we can ignore that mostly. The main thing here is that this is Swiss against US dollar, potentially got a top, and you've got bears, asset managers who are real money accounts and large speculators who are leveraged are now piling into shorts, and prices are relatively high. So I think as we get towards the end of the year maybe, or even a few weeks from now, we could be looking at higher dollar Swiss. But the problem is you've got this little bearish bar, 100-day exponential moving average acting as resistance. So for me, I think it's one to maybe wait for a dip to come down and see if we can get a better position. So it's not really hot on my list. It's just something to keep an eye on. So that's my list for the week. I hope that was useful, and I wish you all best of luck with your trading.